Hey, startup founders, the statistics are in. And here in 2024, entrepreneurs are as much as 75 times more likely to raise startup funds from equity crowdfunding compared to traditional venture investing. This replay of our webinar on equity crowdfunding for startups explains what equity crowdfunding is, how it differs from traditional venture capitalist or angel investor fundraising, and why entrepreneurs love it so much. You'll get to meet Chris Lustrino, CEO of KingsCrowd, who just closed their fourth crowdfunding campaign, with this round bringing in $323,000 for his company. Let's dive in. Good morning, good afternoon, and good evening, everybody. My name is Sam Wong, and we're excited here to be able to have a brand new event for you on equity crowdfunding for startups. I work with a company called Fundable Startups, and basically what we do is we help founders become fundable, raise funds, scale, and then exit. Okay, and we are happy to have KingsCrowd with us here today. Chris Lustrino from KingsCrowd is the CEO. Chris, you want to introduce yourself, and in a moment we'll tell everybody about what KingsCrowd does.
Absolutely. My name is Chris Lustrino. Thanks so much for having me. I'm the founder and CEO of KingsCrowd. In one line, we're building a Bloomberg Morningstar-like solution for alternative investing. But at the end of the day, we've been collecting data on every regulation crowdfunding and regulation A+ offering for over 6 years. And we help founders as well navigate these new waters of capital raising.
Yeah, yeah. So KingsCrowd does a couple of things. Chris, you want to talk us through these three items here?
Yeah, absolutely. So basically, using our database of these 7,000 plus companies that have raised capital over the past many, many years, we can help founders determine what the correct valuation for their business is, how much they can expect to raise in their offering, and if that makes sense for their business. And then we could also help you through our division called Raise Papers, actually create and file the needed documents in order to raise capital online under Reg CF and Reg A+.
Yeah, I helped another startup go through their equity fundraise, and I can tell you this, there's a lot of paper. There's a lot of paperwork to fill out. Okay. So it certainly helps a lot to have somebody who's been there, done that, to help you through that process. Okay. So let's dive into our session here and our agenda today. We're going to do a quick overview of traditional versus equity crowdfunding. What is equity crowdfunding? Why do startups go down the equity crowdfunding path? And what the types of crowdfunding available. Then we're going to talk a little bit about the crowdfunding process. And in fact, since we're talking about crowdfunding here, let me go ahead and pop up a quick poll. We like to be able to survey our audience here on crowdfunding plans. Okay, so the question is the poll, what are your equity crowdfunding plans today with 7 options from pretty much you're done and you successfully completed a crowdfund all the way to no current plans. All right. So back to the agenda here while we're letting the poll run. After talking about the equity crowdfunding process, we're going to spend some time talking about the trends in equity crowdfunding. Why should you care? And who else is doing this and how? Okay. Then this very interesting portion here, Chris and I are going to chat a little bit about successes and failures in equity crowdfunding. Then we'll transition to how KingsCrowd can help with some of your equity crowdfunding and how my company, Fundable Startups, can do the same, help you with your intelligent fundraise. At the end, we're going to talk about our next event with a special offer. So you want to stay tuned there because we spent a lot of time trying to plan this because equity crowdfunding, it's fairly new and you want to make sure you do it right, as we'll talk about later in this session. We'll end with a Q&A. So for the most part, most of the questions we're going to try to attack towards the end of this. We're going to try to do this session in about 45 minutes. All right. So starting off, crowdfunding overview. All right. So let me just define crowdfunding. It's basically the practice of funding a project or a venture by raising many small amounts of money from a large number of people, typically via the internet. It is generally a fairly new process in the grand scheme of business. Equity crowdfunding in general has only been around for about a decade or less, and the equity variant of it is even less common. And as we look at the poll here, for the most part, it looks like more than half the audience is evaluating an equity crowdfund but haven't committed to it. And then somewhere around 1/3 or so, no current plans to do an equity crowdfund. So maybe this session might influence your thinking there. Okay. So thank you very much for doing that. We're going to wrap up the poll there, and let me share the results of that. Okay. So hopefully you can see that there. Okay. So let's continue. So why do people do equity crowdfunding versus traditional startup fundraising? Well, traditional startup fundraising via venture capitalists and angel investors really has a fairly small investor pool. In essence, you're looking at people who are, in terms of how many people are in business in general, there's not a whole lot of people who do professional investing. In crowdfunding, you have a potentially much larger investor pool. Traditional fundraising, investors expect 100x returns. And if you are actually a professional venture capitalist, that you'll know this, but a lot of people who aren't look at this and say, that's just folklore. It's actually not, because about 1 in 10 venture capital investments have a return, an exit. Okay. So that means let's say I'm a VC and I have $10 million to invest, so I'm going to make 10 investments of $1 million each. If 1 in 10 succeeds, that means I'm going to lose $9 million because those nine startups all failed. So the one investment that succeeds, the $1 million I invested in Lucky Company X, okay, that company has to return, if it returns 10x my investment, then all I do is break even. Okay, so this is why the math works so heavily in the investor's favor, where they have to target 100x returns, okay, because they fail so often. Well, with equity crowdfunding, more modest returns are more common. Okay, it's very hard to raise from traditional venture sources. Okay, where equity crowdfunding is successful raises are a lot more common. Traditional fundraising, you're going to probably raise potentially a lot more money, especially in the later stages like a Series B, Series C. It's not unusual to raise 50 or $100 million or even more in a funding round with traditional fundraising. Whereas crowdfunding, you're probably going to raise smaller amounts in aggregate. There are some regulatory hurdles with traditional venture investing, and crowdfunding, unfortunately, does have some rather complex regulations. Traditional fundraising, it's simpler to manage the investors because they tend to have fewer of them, if nothing else. But with equity crowdfunding, you do have more investor operations, communication requirements, and management processes. So if you compare them, ultimately, there are still what I'd say at least four major challenges with the traditional fundraising. And that's number one, most entrepreneurs who are building a company want to raise funds, but they probably don't have a very good network of investors. And it feels a little bit like it's an old boys network that you just can't break into. Okay. That's one practical challenge. Another is what I mentioned earlier, the 100x growth expectation. That rocket ship expectation is just very, very rare. Okay. Of the, 50,000 startup ventures that launch every single year worldwide, not very many of them will return 100x returns. Okay. So the expectations for most investors are just really, really hard to rise up to. It can also be challenging because most entrepreneurs have never raised professional funds from a VC or an angel investor. So you trying to learn as you go along. There's a lot of education involved. And if you don't have help, the path that you navigate can seem rather confusing and difficult to follow. Okay. So if you contrast that with equity crowdfunding, there's a lot of benefits. Basically, it's a lot easier. There's better access to capital, where you've probably heard the term democratize. It's basically making it more accessible to people, so it's not locked into an exclusive club type of feeling. It's a lot more opportunity. There's also the reality is you don't have to have a rocket ship growth of 100x or more. Venture scale is not required. You do need to have a growing concern with great potential. So hopefully your company is still tracking, growing, going up and to the right. Okay, but you don't need to have that ridiculous, rocket ship growth that most venture investors are looking for. Equity crowdfunding can also give you some very good market validation where as you're going through the process, you're going to get some pretty good quantifiable traction. How long is the line to people wanting to either invest in you, learn about your product, or things like that? And it can be a very good way to be able to measure quantitatively, your traction. In addition, it's very possible when you're talking to people who are interested in the crowdfund to get some good qualitative feedback about your company, your product, your offer. Okay, so you can get some very important early insights. You'll also, if you do a good job, you also build an audience among potential investors, potential customers, and some of these customers and investors will also become some of your best evangelists in the space. If your crowdfund is triggers a couple of key things that press and media are looking for, you might get some free publicity out of it. Okay, you can increase visibility for your company and what you're doing. And there's also a number of catalyzing platforms and partners, meaning there are equity crowdfunding websites that will help you through the process. You don't have to really go quite as solo. It doesn't feel quite as manual of a process. These platforms can help you throw more fuel on the fire. And then finally, very similar to the audience building, you can also not just collect an audience, but you can build a community amongst that audience. Okay. So build and maintain engagement is an excellent way to be able to continue to strengthen the pillars of your organization. So I've talked about equity crowdfunding, but I didn't really define what it is. Okay. And let's talk a little bit about the four types of crowdfunding. Probably the most common that maybe our mom or our an older generation might recognize is the rewards or product-based crowdfunding. And that's where someone who participates in the crowdfund campaign might get a product that's not yet built, but they'll get it at a discount or they'll get an extra bonus for doing that. I've bought into a number of rewards-based crowdfunding for some photography gear. Okay, that's my vice. All right. So when I bought in, I got the product at I think a 30% discount or whatever else because I bought in early. Right. So there's also charitable crowdfunding, and that's where you've probably heard many of these situations. Some of it hits the local news where the investor hears about a need and they feel like they just want to help. Okay, this is a great way to be able to really raise some funds. It doesn't necessarily have to, the person raising the funds doesn't necessarily have to be a nonprofit, but conceptually, you're donating to support some type of cause. There's also debt-based crowdfunding, where as part of the fundraise, you are either promoting future revenue or you're agreeing to some type of payment plan. It's not that different from getting a loan for your house, where you're going to have some type of agreement that says, I'm going to borrow, 100,000 or, $500,000, and this is what I'm going to agree to pay back over the next, several years. Okay. And then at the last option here is the equity crowdfund, and that's where the investors and the participants in the crowdfund purchase stock or stock rights in the company. Okay. So if that's okay, I'm going to go ahead and launch another quick poll, and we'd love to be able to understand where people are at with their fundraise so far. So let us know how much funds you've raised, whether it's just your own bootstrapping. Do include any money that you've put into your own venture as well. Okay, so it'd be very interesting to see that there. Okay, so let's continue. The crowdfunding process. How does this work? The equity crowdfunding process. We have here a startup execution roadmap. It's an asset that we've created. It's a free asset we've have on our website. If you're interested in downloading this startup execution roadmap, as well as an accompanying blueprint, which is a drill down, a double click on this, go ahead and scan that. You can Zach, did I give you the link to Jason? Here, I've got it right now. Let me paste into the chat window. If you don't want to scan this, just go ahead and click the shortened link in the chat window. And if you register for our free basic training tier, you can download this roadmap in high resolution PDF. It also comes with an accompanying blueprint. Okay. So in this roadmap, we have a fundability journey, if you will. Okay, that's the upper road where there's 7 steps from forming your startup all the way to exiting. Okay. There also comes with an accompanying fundraising journey, which goes on in parallel. And you should try to track your fundability progress as well as your fundraising progress somewhat in parallel, where one doesn't get too far ahead of the other. And make sure you focus on fundability before you fundraise. Okay. So looks like the poll is done. I'm gonna go ahead and share the results. So anyway, our encouragement is definitely focus on the fundability before you fundraise. To that end, I like to use sports analogies. Fundability is like building strength in the gym before you try to go out into the football field and actually play a football game. Okay, the same principle applies when you're doing building your venture. Focus on making it fundable before you do any type of fundraise. Okay. We have an academy that teaches how to be able to do this, a startup training academy. Okay, we can talk about that later if you're interested. Okay. So let's talk about the fundraising process itself. We have a 9-step process which starts with forming your startup, validating your idea for your startup, and then validating the business model. This is just very practical fundability, first few steps of fundability, which aligns with the first few steps of that roadmap that we showed a moment ago. Okay. So then after you've done some business model validation, you should refine your funding strategy, address any fundability issues, prepare to crowdfund, prepare to market your crowdfund, which is a very important step, launch your crowdfund, and then after the crowdfund campaign is done, make sure you stay engaged with your investors. The color coding here indicates more steps that are more focused on fundability and more steps that are more focused on the fundraise itself. In addition, we have a number of individual bullets that summarize some of the steps that are done, some of the sub-steps done in each phase. Okay, we're not going to get into the sub-steps here. We have another deeper dive class where we can go into that, and we'll talk about that towards the end. So make sure you stay on because we'll tell you about how you can participate in that. I mentioned that the importance of being fundable. Okay, and to us, fundability is your business's ability to secure financing by demonstrating that typical risks have been plausibly mitigated because you've executed across your company in a very, very strong way. Okay. Execution is defined by Harvard Business Review as doing many things the right way. Okay. So when you do, there's lots of things to do. And when you do them all the right way, it increases the chances that your companies can be healthy and fundable. We do encourage that focus before you dive into the actually launching an equity crowdfund. Okay. So let's talk about the crowdfunding trend. Okay. So let's look at the traditional venture fundraise. So this data is from PitchBook, and PitchBook tracks the traditional fundraise environment, and the numbers here are in billions of dollars. So in 2018, it was 146 billion in venture fundraise. It peaked in 2021 at 349 billion, but it then did drop in 2022 and 2023. So you basically see some modest growth from 2018 through 2020. Amazing growth, 2x growth from 2020 to 2021, and then unfortunately a big downturn as the market corrected. Okay. Traditional venture fundraise is down by about 52% over the past 2 years. I've talked to dozens of founders, and many of them are sharing the same story that it's much harder to raise startup funds in today's environment. Well, let's look at how equity crowdfunding is going. So this is data from KingsCrowd. They've done from their database. They've done some good analysis, and Brian has has some analysis that's available on their website at Brian Billu. Okay. You'll notice that from 2018 to 2021, it's 89% compound annual growth rate. That's astounding growth in equity crowdfunding. Okay. It basically almost doubled every year for around 4 years. So then in 2021 and 2022, when the traditional fundraise was tanking, equity crowdfunding kind of held steady. It dipped a little bit from 2021, but the trailing 3-year average is about 446 million. You're within 5 to 10% of that 3-year average. So it's kind of doing really, really well. I know that, for the stock investments that I have, I would have loved it when the market crashed for me to kind of stay steady. I got hit pretty bad when the stock market crashed. Okay. So some recent averages, okay, metrics and statistics for you. The average amount raised in an equity crowdfund is $366,000 with an average check size of 1,190 bucks, with about 408 investors on average participating in the crowdfund. That usually takes around 4 months' time. Okay. And you'll notice in 2023, there were 1,157 successful crowdfund raises. Okay, that's a fair amount. This gives you some perspective on the fact that it's a lot more accessible. The comment that we made earlier that one of the benefits of equity crowdfunding, your chances of succeeding are much, much better, especially when you compare it to traditional traditional venture funding. Okay. In addition, if you look at the number of companies who've successfully raised through crowdfunding, okay, not all crowdfunding campaigns are successful. 79% of them in 2023 did succeed, though, by meeting their minimum dollar amount. And the percentage of companies who are meeting the minimum dollar amount is, steadily growing. So basically, in spite of the fact that around 1 in 5 companies did not hit their minimum, we are seeing that as this becomes more common, institutionalizing the best practices and the processes can help increase your likelihood of success. And that's what we want to be able to talk about is that crowdfunding is not just, put up an ad like you do on Craigslist and then wait for people to come. It's not that simple. Okay. There is a process to follow, and we'll get into that a bit more in our talk with Chris. Okay. So in addition, if you look at in a crowdfunding campaign, historical data shows that most funds are raised in the first 2 weeks. So if you look at the first 14 days, that's going to be the purple bar. For a small raise, 95%, that's a huge amount, is raised within the first 2 weeks. For a mid-size raise, it's about 2/3, and then right around half if you have a large raise that exceeds $1 million. But you can see the impact of the first 2 weeks in the traditional equity crowdfunding. And that basically tells us it's important that you nail the launch. You've got to get out of the starting blocks really, really fast because that's going to directionally determine the overall amount that you'll raise likely based on those metrics from the previous slide. So to nail the launch, it's really, really important that you prepare and you market. And you have to do these things in advance well before you actually launch your crowdfunding campaign. So let's talk a bit with Chris here. Chris, tell us about your crowdfunding experience and what your experience through the crowdfunding process.
Absolutely. So as I mentioned, I started this company about 6 years ago when Reg CF was really just coming online. And during that time, from kind of day one till now, we've raised almost all of the money to build our business, which is north of $6 million through crowdfunding. And we have over 4,000 individual investors who have invested in our company, including about 225 who literally just joined us as of yesterday. We closed our latest round on WeFunder, where we raised about $325,000 from over 225 individuals.
Wow. So that's great. So you had a crowdfund campaign that just ended yesterday.
Yep, that's right, at 11:59.
Okay. That's fantastic. Um, what do you What are some things that you did that you think that helped you to gain that momentum to get that 323,000, I think you said?
Yep, yep. So, there's kind of key things that we see in all of the successful raises that are out there.
Mhm.
And you already kind of hit on it, preparation and marketing. But at the end of the day, you'll see kind of in the first 14 days, you raise a lot of money. And then in the last handful of days, you raise a lot of money. And if you look at our raise, we followed that exact model where we raised about, $100,000+ in the first 3 to 5 days. And then we raised another $125,000 in the last 3 to 5 days. And then in the middle, you see this lull, but it's not actually a lull. What's occurring during that period? Well, the really cool thing about a crowdfund is that you start by bringing your tribe, right? Your people into the fold. So you launch with, hey, KingsCrowd customers, you love us, you love what we do, you follow our story, you're a part of our product, you're using our products, all of this, right? Now you're excited. Okay, why don't you join us in our raise? Okay, great. You get them out of the gate. And then what the middle becomes about is winning over new people to join your tribe. And so all of that time between the beginning and the end was not, me sitting there doing nothing. It was constant communication and updates with people who started to follow us. So one of the really cool things about crowdfunding rounds is when you go on these platforms, people will start to discover your raise. And instead of just investing, what a lot of people will do is they'll decide to follow you. So on almost all of the crowdfunding platforms, you can follow individual deals. And once you're followed, then they can see all of the updates you post and all of the questions that you answer on your offering page. And what they're trying to look at is how are you communicating with investors and what are your updates? Are you progressing as a business? Are you a company that's raising money to accomplish goals, or are you just raising money to raise money? So they really want to see that they can trust you as a founder. They want to get to know you, build a relationship with them, feel connected to you. And then in those last handful of days, you're taking all those people who have been sitting there watching, going, oh, that's interesting. Oh, that was an interesting update. Oh, I really like that. And now you're saying, okay, well, guess what? If you really believe in us, you got to invest because we're closing the round. And that's where you kind of get them over the line and kind of finish the sale.
Got it. So in essence, you have some investors who are kind of queued up to begin with. So once you launch your fundraise, those guys will jump in. But the rest of it, you're nurturing. It's a big nurturing process through the funnel. Okay.
Huge nurturing. If you look at my offering page, you go to wefunder.com/KingsCrowd, and I'll say our offering page for our company. You will see that I posted about 20 updates to our offering page over the 2 or so months that we ran the offering. And literally each one of those updates goes every follower and investor currently in the deal. And I did 3 recorded webinars with people who do like independent webinar recordings, where I talked about KingsCrowd and our deal. We did 3 live webinars where we invited our own customers and followers to come and hear from our team members, from myself and other folks. We did podcast recordings. So we were constantly providing interaction points for
Mhm.
investors to come to us and ask us questions about the raise, and proving that they could trust us and that we were making progress as a business.
Okay, that's very interesting. How much of that was planned beforehand versus just, hey, you an open door just happened to stumble upon you?
So I kind of say you put the structures in place, right? You know the outline, and then what the exact details will be kind of change over time, especially as you see how investors are responding to various things. But I will tell you, I very much went in knowing we are going to do a slew of webinars at these junctures and points. I started getting those webinars recorded or scheduled far before we actually started to launch the raise. Everything was pre-planned in its outline form, and then the
Mhm.
details got filled in as we progress.
Got it. And how much time did it take to prepare for the aside from the marketing and the messaging plan, the communication strategy, how much time did it take to actually prepare for you to launch your crowdfund?
So there's about 4 key things you need to do before you launch a crowdfund round. That's really going to go around your legal offering materials, your offering page, your video and marketing materials, and what's my fourth example? Yeah, and then just kind of preparing your marketing items. All of those, oh, and your financials. I'm sorry, that's the last item. So all of those things typically will take 4 to 6 weeks for someone who's being really diligent and thoughtful about the process. But you have to recognize that you're a founder, right? You're running a business and
Mhm.
you're trying to prep for your raise. So 4 to 6 weeks is that really diligent founder who says, this is the most important thing in the world to me. I'm going to focus on nothing else. If it is not the whole focus, then it could take, 2+ months.
Okay, got it. Did you? So this is not your first time that you've raised through equity crowdfunding, right?
No, we've done 4 or 5 rounds now over 6 years, and we've raised on 5 different platforms since we started the company. So I have a really nice lay of the land.
Interesting, interesting. Um, so I would love to dive into more of that, but maybe we'll probably have to save some of that content for the next event for the sake of time. I do want to ask, so do you have an example of a company that maybe you feel like did a really, really stellar job in preparing and executing their equity crowdfund?
There's a company out there right now that I'm really impressed by. They're called Triagenics. And what Triagenics has done really well is tapped into their messaging and who they're going after to invest in their business. So Triagenics is basically a dental technology company that helps prevent people from ever growing wisdom teeth, which is kind
Oh,
of wild. They've invested, and by the way, these folks, have money, right? But they've invested, I think, around $300,000 in marketing their deal, but they've
wow.
generated well over $3 million in investment. A 10x return on ad spend is incredible. But why are they so successful? It's because they figured out that their message was going to resonate with the dental community. And so they literally have bought lists and worked with marketing agencies that focus on marketing to dentists. And they've made the sale of their securities in the offering basically a marketing campaign alongside selling them on the vision of this new dental technology. And they're winning customers and investors at the same point of contact. And it's been incredibly powerful because they've really honed in and understand their message and what they're trying to accomplish.
Yeah, it's really interesting. In the traditional friends and family fundraising for a startup, oftentimes they say target doctors and dentists.
They have money and they're looking to deploy it places. Yes, it's
Yeah,
a great community to have, but that's one of the things you're going to have to think about, right? Is who is my community?
that's an excellent point. So you used an interesting term earlier. You said tribe. Why do you use that term?
So if I've learned anything from just one of the cool things about doing a crowdfunding round is that people can write in why they're investing and you get to see their comments. And probably of the 4,000 plus people who have invested in us, well over 1,000 of them have provided feedback as to why they've invested. And
Mhm.
their comments are unbelievable. And it's like, I couldn't live without KingsCrowd. This is, one of the most, I can't do my diligence without them. This is one of the most important products I've seen in the market. I trust and believe in the team, the team, the team, the team. These are your rabid fans. These are the people who wholly believe in you. So that's why I say your tribe, because they're more than just passive investors. These are people who truly, truly believe and love your business and what you're doing.
Excellent, excellent. Do you have maybe an example of a company that kind of stumbled and maybe wasn't quite firing on all cylinders in trying to do an equity crowdfund?
So obviously, plenty of companies don't succeed in doing these raises, right? And there's a multitude of reasons as to why, but there's really, without calling out any specific company, because hey, we all have failures in this journey of building companies. But if there's really kind of two key personas that I see lead to failure, it's those founders who are a bit out of touch. And typically, when I say out of touch, they set a deeply unreasonable valuation. They have little to no traction. They're not willing to answer investor questions in a thoughtful and transparent manner because they kind of think they're above all of it. So they go in thinking like, oh, crowdfunding, I'm better than that. My company's amazing. I'm amazing. And so they just set the entire expectations of the round in the absolute wrong way. And they end up really struggling. I've seen some heavily VC backed companies who are like, sure, we'll do this to let our customers in. And they just put it out there and they get no traction and they think, well, I raise VC money. I should be able, people will just pour into my deal. And that's not the reality. And they're a bit out of touch in recognizing you still have to work the deal and build a community just because you're VC backed or whatever else it may be. And the second one is those folks who just come in ill prepared, right? I've seen folks and it always upsets me, but they'll say, oh, we're raising 5 million. And I say, because that's the limit that you can raise. Have you thought about why you're raising 5 million? What is the purpose of that 5 million? And they couldn't even tell you why they're raising that and what their focus areas are and what their growth goals are. And if you look at the underlying fundamentals of their business, they're deeply concerning. And you say, who are you going to reach out to? And they say, oh, I have 1 million followers on Twitter, not maybe a million, maybe 10,000 followers on Twitter. anyone who's been in this space long enough knows if you say you have thousands of followers on Twitter, the odds of them converting into an investor is like 0.0001%. You need more than some Twitter followers, right? You need to build that community. You need to have relationships with people. So they just come in really ill prepared and not ready to actually launch their campaign.
Yeah, it's amazing. We do a lot of idea validation for startups, a la lean startup methodology. It's kind of funny. We run into tons of founders who say, "Oh, I've got this great rabid following. They all say they can't wait for my product." And then when they ask for a check, will you put a deposit down? Will you buy the product? Will you subscribe? They disappear.
Yep.
It's
All the
crickets.
time.
Yeah.
I can't tell you how many people I've pitched who said, "Oh, Chris, the next time you're fundraising, I am in." And then you get ghosted the next time you're fundraising. You never hear from them again.
Yeah, yeah, absolutely. So we had talked earlier, and you'd summarized some key crowdfunding practicals. If I can kind of go to this, maybe I'll just pop them the three up. Can you kind of talk through these three issues here? Know your tribe, know your why, communicate your why to your tribe.
Yep. So these are kind of my three key principles about thinking about your raise. So when I say know your tribe and building that authentic messaging that attracts your community, right? When we launched our WeFunder round just a couple of months ago, we literally said, "Hey, it's been almost 2 years since we did our last crowdfunding round. We know all of you are big crowdfunding believers because you use KingsCrowd. We know you're in the space, you're active investors, and you've been reaching out and asking us, can I be a part of your company?" And so every reason why we were doing this raise, a big part of it was, hey, we've raised a bunch of money offline for this current fundraise, but we're doing this because we want our customers to always have an opportunity to be a part of the journey. So a big part of our messaging was this is an exciting entry point and you deserve to be a part of it because you make us who we are.
Mm,
But knowing why you're doing it, right? Some people are like, hey, I have a widget company. I need money to make more widgets. You don't really care about letting your investors in. You haven't created authentic messaging. You don't even really know why you're raising other than I'm running out of money. That's not going to sell, right? That's not
right.
going to work. So you need to know why you're raising, who those people are. So that goes into the know your why. You're raising money for a specific part. The raising money is step one in the journey, right? You raise money for the purpose of applying that money to executing on your growth strategy and building your business. So to just raise money to raise money does not make sense. And going back to what I talked to a few minutes ago, people will come to me and say, yeah, we're going to raise 5 million. It's why are you raising 5 million? Are you sure you don't just need 250K to build that MVP and get the first 3 paid customers to prove there's something actually here? And set really reasonable valuation of maybe $2 million on this non-existent technology to just prove the model and give those early investors access to something that actually is priced in the right way so that there's upside. So knowing your why are you raising money? How is it going to be utilized? Where is that going to take you? How long is that going to take you? And then at that point, will you be able to raise follow-on funding, right? And that goes to all the things that you've talked about on your page about building your company. They have to coincide. You have to progress the business alongside actually being able to raise money against that progress. So know why you're raising the money and just go look at all these Q&A sections on all the offering pages. At the bottom of every offering page is a whole set of Q&As where investors get to ask you questions. They are going to ask you why you're raising the money, where it's being applied, so on and so forth. You better know those answers because they're going to demand that you answer them. And then communicate your why to your tribe. And this comes down to the entire thing about creating a compelling offering page, creating a compelling video, creating compelling communications with those investors in the Q&A sections, being honest, transparent, thoughtful about your answers, being real about your answers and what you're actually trying to accomplish and do. And then providing lots of updates and helping people understand that you're actually progressing as a business and utilizing those funds in a thoughtful, efficient way to progress your business forward. If you
Mm.
don't do these things well, right? If you don't know who you're selling to, if you don't know why you're selling, and you don't know what you're going to do with these funds, then ultimately you're going to fail in the raise because investors aren't going to believe in you.
Wow, that's a lot of feedback, a lot of advice. Um, so you've clearly done this many times. Maybe if you could roll the clock back to the first time that you were trying to do, or either yourself or trying to help someone with an equity crowdfund, how much time and effort did it take for you to learn all this? And how much help did you get?
I mean, when I started, right, this industry was in its infancy. There was no help, and none of us knew what we were doing. The platforms didn't know, the founders didn't know, the investors didn't understand. I mean, it was a black box we were all trying to figure out. what's amazing about where we are today is you have programming like this and you have service and support providers on every facet that can now help you actually navigate these waters and somewhat know what they're doing, right? We're all still learning. We're still in the early days, but it took me a long time. And one of the other things that you'll learn along this journey is that just like any fundraise, your tribe, for instance, will evolve over time, right? So my first tribe was truly friends, family, coworkers from my past jobs. And I don't mean rich people. I mean people who are putting in $100, $500, $1,000, calling my childhood friends, having them put in $250, anything that they could to get us to that first $100,000 to actually be able to prove that there was demand for what we were doing.
Wow, very scrappy. And thankfully now there's is a lot more knowledge. We do have opportunities to pick your brain, and so that we don't have to kind of bump and steer down the road. Okay. All right. So tell us about this. You've got a startup valuation tool. Tell us about this.
So there's been over 7,000 companies that have raised capital over the past 6.5 years under regulation crowdfunding, and almost 4,000 of them have occurred in the last couple of years. And one of the things that kept coming up was we had founders reaching out to our analyst team and saying, hey, I'm thinking about doing a fundraise. Where should I list? How much can I raise? What should my valuation be? How much can I expect to raise? Is there a revenue multiple that makes sense? What's the best platform for me? And they were asking all these questions. And we realized, oh, wait a second, our database could quite literally provide all of those answers in an automated and thoughtful way. So we've created this free tool to answer these very questions for you, if the founder, to determine, does fundraising under Reg CF make sense for me? If
Mhm.
so, how much can I expect to raise? Where should I list? What should my valuation be? What should my revenue multiple be? So on and so forth. So by inputting your information into our free tool, we will spit out a report for you that pulls from the database of all the companies that have raised in the last 2 years that fit your industry, that fit your stage of company, so on and so forth. And we'll tell you, here's what the successful companies look like. Here's where they listed. Here's how much they raised. Here's how many investors partook. Here's the rev multiples and the ranges, so on and so forth. So it's going to kind of give you that cursory overview of everything you need to know to determine, does this make sense for me, and where should I list, and what should I set my valuation at?
Our family just sold a couple of homes, and going through the selling process, we always had the question of how much is the house worth? What should we list it at? I wish we had KingsCrowd valuation tool for homes. Okay, we had to rely on a lot of manual work to be able to
No,
do.
exactly. Well, just getting those market comps is incredibly challenging. And it's funny, we even have platforms, right? Reach
Yeah.
out, big platforms that say, hey, we're trying to figure out the valuation for this company that wants to list with us. And we think it's crazy, but we don't know how to tell them they're wrong. And it's like,
Yeah.
okay, we'll input the information. And then it spits out, well, there's 12 other companies raising right now at far lower valuations. That's your market comp.
Yeah, yeah. So I think that's an excellent way to be able to calibrate. If you have the most expensive house on the street in the neighborhood in the city, you better have some really good reasons. Like you have a 10-bedroom house or something. If
Exactly.
you look fairly similar to everybody else and they're priced at, 1/10 of your price, it's gonna be a little hard. Okay, great. So, maybe we can kind of move on here and move into a little bit of the kind of the next step. For ourselves, Fundable Startups, the company that we run, we help founders with several offers. We have self-paced training, live academy, coaching, and projects. And stay tuned because we're going to talk about some other stuff that's available with another training event. So, our self-paced training academy, we have fundraising classes, we have 40 hours of which about 8 hours of that is specifically focused on fundraising. We have a 6-week live fundraising academy. We do one-on-one coaching, and we also do projects done for you type of work. If you'd like, feel free to book some time on our calendar to be able to just inquire about how any of these services might be relevant for you. We understand that we have a large menu, and we're happy to help you, like a good waiter, navigate the menu so that we can satisfy your hunger. Okay. So, Zach, if you could post the link to that in the chat window, and then let's wrap up with the ultimate question: is crowdfunding right for you? Well, to answer that question, we really need more time, which is why we have a 2-hour course coming up to help you decide if crowdfunding is right for you. We're just here talking about, best practices and, things like that. but none of this was specifically tailored to helping you make the decision. There's a lot of low-level detail that needs to be involved. That's the goal of this course. Okay. It's coming up on Thursday, May 23rd, 9 to 11 a.m. Pacific time or noon East Coast time. And we'll basically cover about an hour of training on the details of the crowdfunding process. Remember this slide from the earlier in the presentation. There were a bunch of bullets that we skipped. So we're going to dive into some of those detailed bullets in this 2 hour session. And that 2 hour session will also include roughly about an hour of expert coaching. Chris has been a wealth of information. It feels like, he could go on for 20 minutes nonstop because there's just so much that he knows. Well, you can get access to Chris and other experts. Brian is VP of product. I'll be on this event coming up on the 23rd to just talk through your situation. Okay. So if you sign up for this event, this is a link to be able to register. And Zach, if you could post the shortened link to be able to register for this event. The general admission will step up to it's $100, okay, 99 bucks. But now here in this event, we have an initial price of 49 bucks. It's half off, okay? It's a limited number of tickets. So if you're interested, please do act quickly. That number of tickets is going to expire in basically it's for the event. So it expires in about 2 hours. Okay. Um, and remember, as part of this event, we can't help everybody at a really, really low cost, but we can get people together to help you as a group. And that's what we're trying to do. You're going to get access to Chris. You can ask questions. We've seen a lot of questions in the chat window already. I doubt that we're going to answer all those questions. We'll try, okay, to answer as many as we can here. But in this upcoming session, you're going to get a lot more time. And if you're thinking about raising, and if the average raise is about 366,000, then this is a fairly small investment. We've tried to make it very, very accessible. So we have this upcoming event, 2 hours to decide is equity crowdfunding right for you. We also have coming up after that. If you do decide equity crowdfunding is right for you, then we have a multi-week boot camp on how to crowdfund. So it looked like there were some number of questions in the chat window that asked about some of the details of how. This is going to be where we pull in um, lots of experts with access to coaches who support the crowdfunding process. It will help maximize the chance of you getting a successful raise by focusing on implementing best practices. We kind of covered a few best practices. We told you what they were, but we didn't tell you how. The focus of this session here is to help you prepare, market, and launch your crowdfunding campaign. It'll come soon in June. So do stay in touch with us here. We will blast out notice when this bootcamp gets scheduled. If you are thinking about the crowdfund, we strongly recommend that you consider the event 2 on Thursday, May 23rd. All right. So thanks, everybody. Let's go into some Q&A now. All right. Zach, it looks like there's a lot of questions, but can you kind of pick some that might be generally broadly applicable to a large
Yeah.
audience?
Yeah. So once again, because of the massive volume of questions, that just shows how much interest there is. So we can't cover them all in this event. That's why we had that second event. But let's go through some. So one that I wanted to circle back to, and I'm literally going through this ocean of questions here. Someone asked, and I'm sorry that I can't find your name right now, for you to highlight again the difference between a VC focused investor, so an investor is a VC crowd or audience, versus a crowdfund investor, how they have different priorities and different kind of theses of what they're looking for in an investment. Cover that again really quickly.
So let me go back to the slide here.
Yeah,
And I can pop this up. All right, can you see that?
perfect. That's
Okay.
perfect.
Yeah, so most of the traditional VCs and a lot of angels, and I've been talking to a number of angels. I have a meet an investor kind of a video podcast as part of what we do with Fundable Startups. I've been talking to a number of investors because I wanted to schedule to start writing more checks myself. I've been a small time investor. I was thinking about stepping it up. Most of these traditional startup investors are very, very particular and they need huge returns. So even though you may be a very viable company and you can demonstrate a strong path to profit, if it looks like you can return 3x, 5x of an investor's money, a lot of these traditional venture investors are going to say, looks good. They don't almost never tell you no. They'll usually tell you, come back to us in 6 months. Okay. That's the equivalent of a no.
Yeah.
Um, it's just really, really hard to meet the traditional venture investors' requirements because because there's so many of their investments fail, they need to target the 50, 100x returns, which means they are very particular. Okay. Very hard to raise from traditional venture investors. All right. Whereas in the crowdfund environment, uh, a doctor, dentist, or maybe your relative, they're probably going to be quite happy with a 3x to 5x return. Okay, it's going to be probably better than they're going to get by investing in the stock market. Okay, but it does come with risk. So if you can demonstrate that through that engagement with your tribe, the fact that you're trustworthy, you've got a good team, you're responsive, and you build that community, that connection, it increases the chance that you'll be successful. One of the stats that we were publicized when we were promoting this event was the fact that based on simple math, equity crowdfunding is anywhere from 70 to 75 times more likely to result in a successful fundraise. That's not a guarantee. Of course, you still have to do things the right way. But when you compare it to the traditional fundraise, especially when the traditional startup environment, that the traditional venture fundraising is down 50%. I mean, about the only thing that's getting funded nowadays if you have AI attached to your company and can demonstrate that, you're a fancy AI company. Okay.
And then one for Chris, and this kind of is a perfect preview for why we have a second event. Chris, what's a realistic expectation on time and energy that founders should prepare to invest to have a successful crowdfunding campaign?
Great question. From end to end, from the day you go like, yeah, I think I want to do this, to having a really successful raise, I would say, peg it around 4 to 6 months end to end. And that's your, 6 to 8 weeks of preparation to get all of your offering documents, your financials, your video, your marketing materials, figure out who your tribe and your message is, right? Getting all of that prepared, then launching the offering, having the offering open for 3 to 4 months. You saw the average time is typically about 4 months to raise the funds. So from end to end, if you're spending a couple months prepping and then about 4 months running the campaign, you're talking about a 6 month window to really do this successfully and correctly. Not that it can't happen faster. Yes, we've seen companies do it in a couple of months, right? We've seen companies prep in 4 weeks and they have an unbelievable tribe or whatever it may be, unbelievable story, and they could sell out in a month. But that's just not typical. So the typical user is going to take anywhere between 4 to 6 months.
Yeah, if I can kind of chime in on that a little bit. About 5 years ago, I was helping a startup that wanted to do the equity crowdfund, and we didn't have the level of help. We didn't have a Chris. We didn't have all the resources available. And it was rough. We were trying to figure out, as we're going along, we're lost with a compass, trying to figure out what direction's north, etc. And it was rough. Okay, that particular company did not hit the minimum. It did not raise the funds that it needed. But there's a lot of knowledge now. Roll the clock forward 4, 5, 6 years from that incident way back when. Take advantage of the resources. Don't just say, well, we're going to do it and try. Unless you've done it before, it's going to be pretty hard to figure it out. I do think there's a lot of value I know when I was a first-time founder and first-time CEO, when I got quality help from people who've been down there, oh my God, it made all the difference in the world. Okay.
And just one other quick thing I'll say is, when you're doing venture capital fundraising, it's kind of a 1 or 0 situation where you either get a term sheet and you're going to raise X amount of dollars and there's going to be a group of VCs that come in, or you don't and you fail, right? And you get zero. The cool thing about doing crowdfunding is it doesn't have to be your 1 or 0, right? If you set reasonable expectations of how much you want to raise in the first round, okay, we're going to shoot for $500,000 and you raise 250. Well, then at the end of that raise, adjust your expectations of what you can do, but you still raised $250,000 you can put to work and you can take that money. So like, it's not a 1 or 0. You can have a somewhat successful raise. And as long as you're thoughtful about it, you can still progress your business forward. And that's one of the unique opportunities of crowdfunding is it isn't that you either go all in and win or it's nothing. There's a midpoint too, and then you just have to reset your expectations.
Yeah, yeah. I'm not a big fan of going to Las Vegas and playing roulette because the odds of just winning at roulette is just really, really hard. If I'm not a gambler, but if I was a gambler, I'd try to play blackjack and learn how to card count.
Mhm.
Right? Increase
Exactly.
your odds,
Exactly.
basically.
Yep. Increase your odds any way you can.
Yeah, yeah. Okay. Another question, Zach?
Yep. So there's a few. I mean, we had one that was just DM to me. Apple LS asked me, what are the best ways slash tools to manage the complex cap table that crowdfunding will generate?
Yeah, I'm happy to step in on that one. It's not actually complicated. And there's multiple reasons why. One, nearly all of the platforms have now built tools where they will basically they've either created an SPV, a special purpose vehicle, where they manage all of those investors under one line item on your cap table. And then all of the names, all of the individuals are basically hosted, managed by the platform. So in the event of a sale or an exit, right? They're the ones that will have to distribute funds to those individual investors. On your cap table, you could put We Funder SPV LLC, and it's one line item. They've created tools to be able to put out quarterly updates right on the platform that go all directly to every one of your investors. So it's not overly complicated. And even for the platforms who have not yet done that, again, I tell people all the time, okay, it's an Excel sheet with a bunch of names, and then you could put you could have that in one tab, and on the other tab, it just says my start engine round or whatever platform it is. It doesn't have to be complicated. I think that's been an oversold thing that VCs have tried to use to say this is bad. And it's just not true. It's not hard to manage. There's a lot more we could go into about transfer agents and using people who can help you with this stuff, but it's truly not complicated.
I would amend that a little bit, in that it's not complicated if you have the right partner with the right tools. Okay. If you don't have the tools, if you aren't given the right guidance, then you can get tripped up. Okay.
Sure. No,
Um,
absolutely.
yeah.
Absolutely. That's right.
Yeah. Okay. So don't just think, oh, I know Excel, I can manage all this. Even if you are an Excel whiz, there's still probably a very good reason why to use an SPV, if nothing else for operational management on corporate development stuff. In other words, if you had something that had to go off to get shareholder approval, you don't want to have to chase down hundreds of investors. You want it organized through a special purpose vehicle so that you deal with one manager of the SPV instead of hundreds of investors. Okay.
And one other thing I'll say there is I have found those 4,000 individual investors to be far easier to manage than a couple of rather annoying larger angel investors, right? Who feel as though they're special and deserve all sorts of special treatment.
That's another story altogether. I've got tons of war stories and some scars about certain investors who sit on your board and they're supposed to work in the best interest of the company because that's their fiduciary responsibility, but they're really working in their own best interest.
Yep.
I've seen that happen multiple times. In fact, there's a couple of investors who said they prefer not to take a board seat because if they don't have to work they don't have a fiduciary responsibility to work for the best interest of the company. They can work in the best interest of themselves without being liable.
1,000%.
Yeah, it's amazing. Okay. We're getting near the top of the hour. Let's try one final question.
Yeah, it's a perfect segue to the end of the event. Chris, if you had to kind of summarize what changed the most from your first ever crowdfund campaign to your recent campaign, you just closed over 300K right from the crowd. What kind of changed the most between those two approaches to crowdfunding for you?
The support in the industry, and by that I mean there's so many people who can now support and help you through your fundraise, whether that's on the marketing front, the legal front, getting the word out there, helping you manage the SPV, so on and so forth. There's just a ton of support. So that's one. And the other thing is just comfort and awareness of what crowdfunding is. So literally the first time that I was doing this, I was walking around, I was living in Boston at the time. I was walking around and meeting with individual investors, angel investors in Boston. And the idea of putting money online into my company freaked so many of them out. And I lost a lot of checks because I was trying to raise every dollar online and they refused to send, a wire, but make their investment online. And how is it ever going to be, tracked? And I'm going to lose my investment. And this isn't trustworthy, yada, yada, yada. All the issues of, what mobile banking had 20 years ago, right? So there was just so much discomfort from so many people. And I will tell you, the greatest thing that happened to the industry in a way, and I don't mean this in a crazy way, but what was COVID, because suddenly people were forced to be at home and couldn't go and send the checks or be in person, this, that, and the other thing. And it totally changed investor behavior and gained a lot more comfort with our industry. We saw it literally overnight. It was like a switch went off, and really helped people gain comfort with doing this in a virtual setting. And that's been really, really powerful. So now when I tell people, yeah, go on WeFunder, they're like, okay, great. Sounds great. Before it was like, WeFunder, what is this? Should I, can I trust them? I'm not putting my money in there. That's completely changed.
It's incredible.
Got it. I'm looking here, and it looks like our initial allotment of the $49 tickets for the follow-on event has already sold out. I am going to, since people who stayed here, let me share real quick a promo code that you can use to match the $49 price. Okay. Let's see. So if you want to sign up for the event in 2 weeks, let me pop it in here. Use promo code. Okay. So feel free to use that promo code to be able to get a match price on that $49 offer. Okay.
And that'll be on Eventbrite, right? So they go to the link and use that code on Eventbrite.
Yes. Yes.
Okay.
So you go to the checkout page, basically that QR code that is there, which is let me just repaste the. So this is the shortened link to get to the Eventbrite QR registration page. You can click that shortened link, and then as part of the checkout process, use that promo code.
Perfect. It's been an awesome event, you guys. Huge engagement from the crowd. Great insights from Chris, from Sam as well. It's been awesome.
Yeah, thanks everybody for your time. Hopefully this has been useful, and we would look forward to having you in the next session on May 23rd. Okay.
Sounds great.
Wonderful. Thank you, everyone.
See you guys.
Thanks, everybody. If this was helpful, please like this video, subscribe to our channel, and click the bell to be notified when we release new content. When you do this, YouTube promotes our videos to others, which allows us to spend less time on our marketing and more time creating startup content for you. We hope this video helps you build a very healthy, fundable startup.